Hello guys, how are you? What's up? I hope you all are doing very amazing. Guys, today we're going to complete our with two chapters of the Companies Act on our day 5. Number 1 is the most important chapter, that is accounts and audit, and number 2 chapter is people prevention of operation mismanagement. So our goal is today we're going to complete our with two chapters. This is going to be our day 5. Number 1 is accounts and audit. Number 2 is prevention of operation and mismanagement. Guys, this chapter is going to be very lengthy. So what we are going to do is we're going to revise using mind maps. When we revise using mind maps, all our topics will be done. The same time, our revision will also be very fast. Shall we begin, guys? Everyone, first tell me who all are watching right now. Give me a thumbs up. Do we have a new student today, guys? Do we have a new student today? Let me give me a thumbs up, guys. Chalo. So people, section 128 is going to be our first section. What does section 128 says? Company should keep books of accounts. Basic rule, every company must prepare and keep books of accounts. Number 1, they must keep other relevant books and papers. Number 3, they must maintain financial statements for every financial year, and records must be accurate and complete. It should also give you a true and fair view of the entire situation of the company. Okay, again, every company must maintain 3 types of documents compulsory. Number 1 is prepare and keep books of accounts. Number 2 is keep other relevant books and papers. Number 3, maintain financial statements for every financial year. All these records shall do 2 things. Number 1 is accurate and complete, and it should give a true and fair view. Very easy, guys. Okay. Now, what should be the place of books of accounts? By default, the place should be the registered office, guys. Exception, if the company wants to keep its books of accounts in some other place, they can keep, provided 2 things must happen. Number 1 is board resolution should be done. And number 3 is company notifies to ROC within 7 days. In which form, guys? In AOC 5, they must inform ROC that we have kept our books of accounts in some other place that is not the registered office. Okay, sir. Now next is branch office books of accounts. Now every branch office must maintain proper books of accounts. Branch office must also send periodic summarized returns to the registered office. Consolidated accounts can also be prepared. So branch office can prepare the consolidated accounts of all the branch office, and they can send a periodic returns to the registered office. Very easy, guys. Simple, guys. Section 128 in an exam question can be asked in MCQs. Okay, sir. Now next is most important topic, and that is financial statement, that is section 129. First, let's understand the meaning. Meaning is financial statement is an official report that shows true and fair view of the company's financial position. Financial statements is an official report that shows true and fair view of the company's entire financial position. Now, financial statement includes 5 items, 1, 2, 3, 4, 5. Number 1 is people, balance sheet. Number 2 is profit and loss account. Number 3 is cash flow statement. Number 4 is statement of changes in the equity. And last is notes to accounts. So, financial statement includes 5 items. Number 1 is balance sheet. Number 2 is profit and loss account. Number 3 is cash flow statement. Number 4 is changes in equity. And last is people, notes to accounts. Very easy. Okay. Now, who are the persons responsible to maintain the financial statements? MD, manager, CFO, or whole-time director. Now, guys, they can also appoint any other person authorized by the board. And last is, if all these people are absent, then all the directors will be held responsible. Very important, guys. In your exam, question can come in a form of case study. Who is responsible to maintain books of accounts? Number one is MD, manager, CFO, whole-time director, or any other person authorized by the board are responsible to maintain financial statements. Now, if nobody is there, then all the directors will be held liable. Easy, guys. Chalo. Now, let's talk about accounting standards. So, if company does not follow accounting standards, now you might think it's a very big offense. No, guys. If company does not follow accounting standards, they just have to do three things. Number one, they must inform that we have deviated in the accounting standards. Number one. Number two, they have to inform the reason for deviation. And number three is, because of such deviation, what financial impact can cause in the company, they must inform. So if at all company is not complying with the accounting standards, they have to do three things. Number one is, they have to first inform what deviation we have done. Number two, they have to inform the reason for such deviation. And number three is, what could be the financial impact of such deviation, they have to report. Okay, sir. Next is, what is the meaning of true and fair view? We have heard this a lot of times. Books of accounts, financial statements shall give a true and fair view of the entire financial position. Now, the important question is, what is the meaning of true and fair view? Number one, they must comply with the accounting standards. Number two, Schedule 3 format must be followed if we are preparing balance sheet, profit and loss account, cash flow. And number three is sectoral companies. Now, what is the meaning of sectoral companies, sir? Sectoral companies means what? Those companies which are regulated by, either it could be RBI, it could be insurance, it could be any other sectoral regulator. So, sectoral companies won't be said to have not complied if the omitted items are not required by the sector specific rules. Sir, I did not understand anything. Simple, guys. If insurance laws say that you don't have to disclose XYZ number of items, it's completely fine even if you don't disclose. But sectoral laws must say that you don't have to disclose XYZ number of items. So if a company which is regulated by insurance sector, if insurance sector requires those companies to not disclose certain items, and if that company does not disclose certain items, it is completely fine. It will not be called as an unfair. Okay, sir. Now, next is, government can exempt certain classes in public interest. Example is defense companies. So, government can ask some companies that you don't have to follow XYZ number of rules because it is a very highly sensitive situation. Defense companies, data is very sensitive, you cannot disclose it. So, government can exempt certain classes of companies not to reveal the details. Okay, sir. Now, next is presentation of financial statements. Section 129, subsection 2. What does this section says? Every year, financial statements must be prepared and laid before the AGM for shareholders' approval. Every year, financial statements must be prepared and it should be laid before AGM for shareholders' approval. Okay, sir. Now, penalty for non-compliance. If you don't comply with the accounting standards, if you don't comply with section 129, then guys, fine is 50,000 rupees to 5 lakh rupees, imprisonment up to 1 year or both. Okay. Now comes another important thing. We know this. Section 129 subsection 1 says financial statements format must be as per Schedule 3 of the Companies Act. Companies Act gives you a format of how should the financial statements be prepared. They must comply with the accounting standards. Now you tell me, guys, what is a section of accounting standards? Section 133. After these marathon lectures end, I will teach you how to remember sections in such a way that just by attending this one lecture, not this one, the remembering sections lecture, you won't forget any single section of the Companies Act, no matter how long it's been over. Even it's been 5 years, 6 years, 7 years, you will still be able to remember sections. I will teach you a magician's trick. Okay, sir. Now we know that exception is insurance, banking, electricity, or any other regulated company, which we call it as sectoral companies. They don't have to follow section 129 if their regulator law says so. Good evening, Simantini. How are you guys? Who all are watching? Give me a quick thumbs up. Today is Friday. Is that the reason why nobody is watching? Tomorrow is a weekend. No problem, guys. Even if this lecture has ended, please make sure that you watch every single minute of this lecture. It's very, very important. Accounts and audit is the most important chapter of the Companies Act. Tomorrow, we are going to talk about KMP, board meeting and procedures. I've kept it purposefully on Saturday, so you will be free to watch these lectures. Okay, sir. So section 129 is done. Now let's come to consolidated financial statements. Very, very important section. You will definitely get confused in this part. Who all are exempt to prepare consolidated financial statements? Okay, sir. Now, mandatory preparation of consolidated financial statements. Which section says so? Section 129, subsection 3. If the company has got one or more subsidiary company, one or more associate company, one or more joint venture, company has to prepare their own stand-alone financial statements. But in addition to stand-alone financial statements, company also have to prepare consolidated financial statements covering all the details of the parent company, its subsidiary company, its associate company, its joint venture company. Simple, guys. I will prepare my financial statement also. Along with my financial statements, I will also prepare subsidiary, joint venture, associate companies' financial statements. It should be in the same form and manner in which parent company has prepared financial statements, and they must comply with the accounting standards. Example is Ind AS 1, Ind AS 21. Again, guys, consolidated financial statement will also be laid before the AGM. So we understood three rules. Every company which has got more than one subsidiary company, joint venture company, associate company, they have to prepare consolidated financial statements. It should be in the same manner and form. They must follow accounting standards. And number 3 is, it should be laid before the AGM. Hello, Jayanan. Good evening, guys. Chalo. Now comes next, salient feature. So, company must prepare the financial statement also. Along with the financial statement, they must also make a separate statement indicating the key features of subsidiary, associate, joint venture. So, company must prepare CFS, that's for sure. But along with the CFS, they must also prepare a statement that shows in summary the key features of subsidiary, associate, joint venture companies, so that shareholders don't get surprised, shareholders don't get confused with so much amount of financial information. To make their work easy, you have to give them a summarized returns. And the form should be AOC 1 form. AOC 1 form will give you the features in summarized form. Very easy, guys. Chalo. Now, we know that consolidated financial statements must also follow Schedule 3 and applicable accounting standards. If accounting standards is not required in a CFS, even if you follow Schedule 3, that's completely fine. So there is an applicability who have to follow accounting standards. If this company is exempt from following accounting standards because government says so, then even Schedule 3 is sufficient. Now comes the most important part. Sir, to which companies consolidated financial statements are not required to be filed? Listen to me very, very carefully. This is the most important part of this topic. If the company is a wholly owned subsidiary company or partially owned subsidiary company, let's say Flipkart is the holding company of Myntra. Now the question is, when is Myntra exempt from preparing financial statements? Flipkart owns Myntra. Now the question is, when will Myntra exempt from preparing CFS? All shareholders, including the non-voting ones, are informed in writing. All the shareholders of Myntra must be informed in writing that we are not preparing CFS. Are you okay with that? If nobody objects to non-preparation, and this is the most important, ultimate holding company or immediate holding company, that is Flipkart, prepares CFS on behalf of Myntra, then it's completely fine. Myntra, even if they don't prepare CFS, it's completely fine. Now people, this part is again exception. If the company is into the process of listing, or if the company is a listed company, being a subsidiary company, if the company is listed, they have to prepare CFS no matter what is the case. So to listed and those companies which are in the process of listing, to those companies, this rule is not applicable. So 3 conditions. When will subsidiary company be exempt from preparing CFS? Number one, it should be a subsidiary company first of all. Number two, subsidiary companies, all the shareholders have been informed in writing, nobody objects. And number three is parent company should prepare CFS on behalf of subsidiary company. Okay, sir, this is done. Now let's come to section 134, very, very important, signing of financial statements. Who all are watching? Give me a quick thumbs up, guys. Signing of financial statements, section 134. So guys, first of all, financial statements, before they are even laid down before the AGM, it should be first approved by the board of directors. BOD must approve financial statements before signing. Without approval, the financial statement is completely invalid. So before you lay down your financial statements before the AGM, you have to first take the approval of the board of directors. Okay, sir. Now the important question is, who signs the financial statements? So if chairperson is authorized by the board, chairperson signs. Now what is the meaning of chairperson? Chairperson is that guy who is the head of the board of directors. Chairperson is that guy who is the head of the board of directors. Then sir, what is the meaning of MD? MD is the one who participates in the day-to-day decisions of the company. That is called as MD. But chairperson means what? Who is the head of the board of directors? That guy is called as a chairperson. So if chairperson is authorized by the board, chairperson, if he is not authorized by the board, he is not allowed to sign. First of all, one question you have to ask is the chairperson authorized by the board? If the answer is yes, then only he can sign on the financial statements. If there is no chairperson, at least two directors must sign on the financial statements. Now among those two persons, one of them must be MD, if the company has got an MD. Simple, guys. So who signs the financial statements? If chairperson is authorized by the board, chairperson will sign. If chairperson is not authorized by the board, two directors must sign the financial statements. Among those two directors, one director must be an MD. Okay, sir. Now, in addition to them, who all must sign financial statements? CEO, CFO, CS. Only if CS is appointed, then only he will sign the financial statements. Otherwise, it is not required. And last is, if we talk about the case of OPC, even if one director signs on the financial statements, it's completely fine. Okay, sir. So, section 134 is clear, I hope. Can I get a quick thumbs up, guys? Everyone. Now, next is section 136. Right of members. Members means what? Shareholders. Right of members to receive copies of financial statement. That is section 136. Now the important question is, who should get financial statements? Every member shall get financial statements. Every trustee for debenture holders must get financial statements. And last is, all entitled persons must get financial statements. So three people should get financial statements. Everyone shout before the screen. Who should get financial statements? Number one is every member, every shareholder. Number two, every debenture trustee for the debenture holders. And last is, all entitled persons must receive financial statements. Okay. Now, when do you have to send the financial statements? At least 21 days. So 21 days before what date? 21 days before the AGM. You have to send the financial statements. 21 days before the AGM, you have to send the financial statements. Now, how are you going to exactly send the financial statements? It could be physical copies or it could be electronic copies. If the shareholders hold shares in demat form and they have given you the address in email, if not sent 21 days before the AGM, it is still valid, sir. Then why did we study this provision in the first place? There could be circumstances where sending financial statements on time could not be possible. So, in that case, you have to take the approval of 95% of shareholders. If they agree, then it's completely fine even if you send the financial statements late. Otherwise, you have to send the financial statements 21 days before the AGM. Easy, no, guys? Is my speed comfortable? Everyone understand? No? Okay. So, when do you have to send the financial statements? Number one, tell me in the chat box, guys, everyone, at least 21 days before the AGM, you have to send financial statements. Number two, you can also send financial statements little late, provided 95% of shareholders give your consent. It is completely fine if you give us financial statements little late. Okay, sir. Now, financial statements of the subsidiary company should also be provided to any member who is requesting it. Copy of audited or unaudited financial statements. So, if members require financial statements of the subsidiary company, you have to give them financial statements. It could be audited financial statements or it could be unaudited financial statements. Both are fine. Okay. Now, exceptions. So, this is, we spoke about normal company. If we speak about Section 8 company, 21 days is not applicable, 14 days is applicable. That means for 14 days before the AGM for Section 8 company, you have to send them financial statements. Nidhi company. If we talk about Nidhi company, even if you can give a public notice in newspaper, plus you publish financial statements on notice board at the registered office, it's completely fine. You don't have to send financial statements to everyone. Members can inspect and still vote at the AGM. It is completely fine in case of Nidhi company if you don't send the financial statements, provided you publish that financial statements on the notice board of the registered office and you have to publish notice in the newspaper. Now, when is this applicable? If members don't hold shares more than 1,000 rupees face value, all are very small shareholders, or they are holding less than 1% of share capital. And it's completely fine. Whichever is less to these people, it is completely fine even if you don't send them financial statements. Okay, sir. Now let's talk about listed company. How are you supposed to circulate the financial statements? If it's a listed company, you have to send them financial statements. We're going to understand how in the later part. But if we talk about public company, net worth should be more than 1 crore, turnover should be more than 10 crores. If that is the case, you have to send them financial statements. Now the important question is how? You can send them by electronic mode. If shares are held in demat mode, an email is provided to the depository. You can send the financial statements by email. It is completely fine. But if shares are held in physical form, email only if shareholders consent. That it is fine if you send us financial statements on email. Okay, sir. Now you can send them physical mode in other cases. Okay, sir. Chalo. Now deemed compliance. Let's look at this. Every listed company is considered to have complied with Section 136. In which scenario? If they make financial statements available for inspection at the registered office 21 days before the AGM, okay, they send either a statement of salient features in AOC 3 form. They don't have to send the financial statements. They only send them a summarized feature. Exactly what does the financial statements talks about? Which form is that? AOC 3. Or copies of full financial documents are sent to members at least 21 days before the AGM. It is completely fine. Okay, sir. Now, disclosure on website. Now, when are you supposed to disclose on the website? Separate audited accounts of each subsidiary company has to be placed in the website of the listed company. Flipkart has to place the financial statements in its website for Myntra. Okay, sir. Now, let's assume that if Myntra is a foreign company, let's take an example of Tata Motors. Jaguar is a subsidiary company of Tata Motors. Now, in that case, what will Tata Motors do? If law of that country requires CFS to be prepared, then placing that is sufficient on the website. If the country of Jaguar requires company to prepare CFS, simply placing those CFS is enough. Next is, if law does not require audit, they say that even if the financial statements are prepared and it is not audited, it is completely fine. You can place unaudited financial statements because the subsidiary company's country says so. Now, if the financial statements are prepared in foreign language, how do you think the shareholders are going to understand? So to make their work easy, you have to translate that into English language. Easy, guys. Everyone with me now? Website disclosures. Every listed company must upload financial statements including CFS plus annexures in the website. Okay. Now let's talk about section 137. 134 is signing of financial statements. But over here, once financial statements are signed, now you have to file those financial statements also. Now what does the provision says? Good evening, Srinidhi. Chalo guys, section 137. What does this say? Every company must file financial statements. It could be standalone, it could be consolidated with the ROC. Simple rule. Next is, which form are you going to file financial statements? AOC 4 form. You're going to file financial statements and AOC 4 CFS if company is preparing consolidated financial statements. Okay, sir. Now, what is the timeline, sir? Within how many days company has to file financial statements? Within 30 days of the AGM, company has to file final adopted financial statements. What is the meaning of adopted? Adopted means shareholders have approved those financial statements. Then you have to file approved adopted financial statements with the ROC within 30 days of the AGM. Filing is done using by paying fees and additional fees if you are filing it late. Okay, sir. Now, what if financial statements have not been approved by the shareholders? In that case, are we not supposed to file financial statements? You are still supposed to file. If AGM is held and financial statements have not been adopted, what is the meaning of financial statements not adopted? If shareholders have not approved FS in the financial year, that is called as unadopted. Unadopted financial statements must be filed. Even if it is unadopted, it should be filed with the ROC within 30 days of AGM. So AGM has been conducted. Shareholders have not approved financial statements, still nothing doing. Within 30 days, you have to file financial statements with the ROC. Now, AGM has been adjourned. What is the meaning of adjourned? If for any reason AGM could not be conducted, AGM is postponed. Now, in that case, in that AGM, we have neither approved nor disapproved. In that case, when are you supposed to file financial statements? You have to refile financial statements within 30 days from the adjourned AGM date. Easy now, guys. Everyone, are you able to understand? The goal is ROC must know your financial statements. It doesn't really matter whether you have adopted, unadopted, whether shareholding meeting was conducted or not. You have to file financial statements. Sir, now in this provision we have not understood. What if meeting was not at all conducted? Over here we have understood that shareholders have not approved or shareholders have postponed the AGM. What if meeting was not conducted? Let's come over here. If AGM is not held, you have to file financial statements within 30 days from the date on which AGM should have been held. AGM was not held, but AGM should have been held on that date. 30 days from that date, you have to file financial statements. Now that you have not conducted AGM, you also have to give a reason why company did not conducted AGM. Easy now, guys. Everyone, are you with me? Am I going slow? Are you able to understand everything, guys? Okay. Now, let's talk about foreign subsidiary company. Indian holding company must attach the accounts of foreign subsidiary company. Foreign subsidiary company. If the country where the foreign subsidiary company is situated, if they don't require, the company should be audited. Filing can be done even if it is unaudited, and declaration has been given why we have submitted unaudited financial statements. If it is in foreign language, we know you have to translate this in English language. If we talk about OPC, 30 days is not the case. OPC gets a relaxation. They are allowed to file financial statements 180 days from the financial year closure. Guys, tell me one more thing. Is my mind map clearly visible now, guys? Shall I zoom in? Shall I increase the size of the font? Whatever problem you are facing, just let me know. The goal is, you know what is the goal? The goal is 70 plus marks you should score in CMA Final. To achieve that, whatever is required, I am going to do it. Okay, guys? So, if you want any help from my side to improve the experience, just let me know. Okay, sir? Chalo. Now, what if you don't comply with section 137? Company should be fined 10,000 rupees plus 100 rupees per day from the date of default, maximum 2 lakh rupees, and every officer should be paid. Every officer should pay a fine 10,000 rupees and 100 rupees per day, maximum is 50,000 rupees. Now comes important part, AOC 4 XBRL. Can anyone tell me in the chat box what is the meaning of AOC 4 XBRL? AOC for XBRL is a detailed way of preparing financial statements. So it becomes very easy to understand, compare details of financial statements of different companies. And that is why AOC 4 has to be prepared to make understanding, analyzing financial statements easier. Now, if we talk about understanding financial statement easier, obviously AOC 4 must be prepared by big companies. Now, exactly what are those big companies? Listed company plus every Indian subsidiary company of that listed company have to prepare financial statements in form AOC 4 XBRL, or whichever company has got a paid share capital of at least 5 crores or turnover of at least 100 crores, company is required to prepare accounts with respect to Ind AS. They have to prepare financial statements in AOC 4 XBRL. Now comes the most tricky part. Once AOC 4 is XBRL is applicable to you, no matter, even if thresholds get reduced, no matter, even if you don't follow these conditions, still you have to file AOC 4 XBRL. Once it is applicable, you have to follow it continuously. There is no going back. Irrespective of thresholds getting changed or not, it doesn't really matter. You have to file AOC 4 XBRL. Okay, sir. Chalo. Now let's come to financial statements and board report, section 134. We're going to go in little more detail. Amendment is there in this section. Okay, chalo. We'll just zoom in. Yes, financial statements and board report, section 134. So board report shall be prepared based on stand-alone financial statements. So the moment financial statements has been prepared, immediately you have to start preparing board report. Highlight the performance of the subsidiary company also in the board report. So board report must be prepared on the basis of stand-alone financial statements. It must also include the information of subsidiary company. Okay, sir. Now, financial statements including CFS approved by board and signed by chairperson, two directors, CFO, CS if appointed, we know this. Okay, sir. But there is one change over here. So now I am talking about board report. Okay, guys. So board report must be signed by the chairperson if authorized, two directors, one must be MD, and if the CEO is a director, he can also sign, CFO and CS if appointed. Okay, sir. In OPC, it shall be signed by one director only. We know this. Auditor's report must also be attached along with the board report. And next is financial statements must include notes to accounts, auditor's report, board report. We know this, guys. Very easy. Okay. Now, contravention, 3 lakh rupees for company. Officer in default is 50,000 rupees. Chalo. Now, board report must include certain details, certain matters with respect to the company. Exactly what are those matters? Basic company information, board and director related disclosures, compliance and audit related issues, financial transactions and RPD transactions, policies and risk management, corporate social and environmental responsibility. Special case OPC only include board comments and audit report. So guys, I'm assuming that you can read this on your own. It becomes very easy. But I'm going to talk about now amendments. Amendment is board report must also include 2 more items. Number 1 is, guys, sexual harassment complaints. The details, how many complaints they have received, how many complaints they have resolved, how many complaints is outstanding, how many complaints ended during the year. All the details with respect to sexual harassment, they have to disclose in the board report. And number 2 is, guys, maternity benefit compliance also they have to report in the board of directors report. Okay. Now comes, guys, along with the board report, you also have to attach one document called as Directors Responsibility Statement. Basically, it's a statement where directors give a declaration that from our side, whatever compliance is required, we have checked and ensured compliance with the rules and regulations. So exactly what all declarations a director give? Number 1 is accounting standards have been followed. Number 2 is policies and estimates that we have made for the future is reasonable and consistent. Adequate records are maintained to safeguard assets and prevent fraud. Accounts are prepared on a going concern basis. Company has not prepared accounts thinking that it is going to close down in the future. For listed company, internal financial control system is strong and effective. Directors have to give a declaration. And last is, whatever systems ensures compliance, whatever systems are in place to make sure company does not engage in fraud, that system must be effective. Directors give a declaration of 6 items: accounting standards, policies and estimates, adequate records. Then accounts are prepared on a going concern basis. For listed companies, internal financial control system is maintained. And last is, system that ensure legal compliance is very effective. Everyone, you are with me, no guys? Can I get a thumbs up? Can I get a thumbs up, guys? So guys, next is the most important section. Section 135. A lot of times questions have come from this section, corporate social responsibility. So tell me guys, to which company CSR is applicable? CSR is applicable to every company having any one of the following in the preceding financial year. CSR is applicable to every company which has one of the following in the last preceding financial year. Number 1 is, guys, net worth should be at least 500 crores, net profit should be at least 5 crores, and turnover should be 1000 crores. I'm using the word or. So net worth 500 crores, net profit 5 crores, or turnover 1000 crores in last preceding financial year. The company has achieved any of the following, they have to comply with section 135 that talks about CSR. Now that CSR is applicable to you, we know. Now you also have to form a CSR committee. So CSR committee, basically they will check whether CSR amount has been spent properly or not. So every single aspect of CSR will be checked by CSR committee. Committee must consist of 3 or more directors from the board of directors. Okay, sir. And among them, at least one should be an independent director. If there is no independent director, minimum 2 directors are required. Board report must disclose the composition, who all are members of CSR committee. Board report has to disclose the composition of CSR. Okay, sir. Now next is, what exactly is the function of CSR, sir? 1, 2, 3. Number 1 is formulate and recommend CSR policy to the board that our company is engaged in hospitality. So we should also make expenditure for CSR in the hospitality sector only, healthcare sector only. Their job is to recommend CSR expenditure. How much are we supposed to pay? Next is, once they have recommended CSR, it's their job to monitor whether CSR is going as planned or not. So CSR activities should be with respect to Schedule 7 only. So Schedule 7 gives you a list of activities where you can undertake CSR. It should be similar to those activities only. Guys, do you remember while we were studying corporate governance, we understood that Schedule 7 must be interpreted with a broader sense. Any activity that is similar to Schedule 7 activities can be undertaken as CSR. Not compulsory that whatever has been mentioned in Schedule 7 only have to be undertaken as CSR. No. Even if your activity is similar to Schedule 7, it is allowed. Okay, sir. Next is role of board. The job of the board is to approve and report CSR policy in the company's website and the board report. So it's job of the board of directors to approve the CSR by the CSR committee in its board report and company's website. Their job is to ensure that all the activities are actually carried out. So guys, role of board are 2 things. Number 1 is approve and report CSR policy, and number 2 is ensuring activities are actually carried out. Okay, now comes the most important question. Sir, we know that to which company CSR is applicable, but we don't know how much are we supposed to spend in CSR. You have to spend at least 2% of average net profits of last 3 preceding financial year. You have to take last 3 years net profit. You have to take an average. Whatever amount comes, you have to spend 2% of that average. Preference shall be given to local areas. And guys, whenever you calculate the average or net profit shall be calculated as per section 198. 198 basically talks about what expenses you can include, what income you cannot include. Okay, sir. Next is, what if you have not spent CSR expenditure? If company has not spent CSR expenditure, they have to disclose reasons in the board report. Why did we not spend CSR? Now, if it's a very long project, it will take a lot of years. This is called as ongoing project. But if it's a short-term project, it is called as not ongoing project. So if you have not finished your ongoing project, then what you have to do, listen to me very, very carefully. Special bank account has to be created within 30 days from the end of the financial year. So this financial year has ended. I have not completed my CS expenditure. Within 30 days of the financial year end, I have to open a bank account and I have to deposit all my CSR fund to that bank account. And within 3 years, I have to make sure that money is spent. Otherwise, money automatically goes to the government fund. Simple, guys. If you have decided to undertake a ongoing project means what? It will take a lot of years to complete. Okay. Now you have not spent money in the CSR towards the ongoing project. It is still pending. By the end of the financial year, within 30 days, you have to transfer that money to a separate bank account and you have to spend that money from that bank account within 3 years. If you don't spend, the money will go to government fund. Now the question is, what if the project is not ongoing? It's a short-term project. If it's a short-term project, you shall anyhow complete that project, but still you have not completed. In that case, transfer money directly to the government fund within 6 months. Within 6 months, you have to transfer. There is no provision where you have to spend within 3 years. If it's a short project, you are supposed to spend money, but you have not spent. Within 6 months from the financial year end, you have to transfer money to the government. So people, over here, we are done with section 135. Now let's talk about section 138. Very, very important. Many times questions have come in your exam with respect to internal auditor. Everyone, are you with me, guys? Can I get a thumbs up? Chalo, guys. Now let's talk about internal audit. So what is the meaning of internal audit, guys? To check that if the company has got internal systems effective or not. If the company's internal system is very weak, very easily fraud can happen. So the job of the internal auditor is to check that company has got effective and strong internal control mechanism. Now, to which company's internal auditor is mandatory? Obviously, where there is a possibility of fraud. If there is a possibility of fraud, you have to make sure that your internal control system is very strong. So every listed company is required to appoint internal auditor. Now, internal auditor can be individual. He could be a body corporate. It could also be a partnership firm. It could be a partnership firm. It could be a body corporate. It could be an individual. But if we talk about stat auditor cannot be a body corporate. Okay, guys, LLP is allowed, but body corporate is not allowed. Next is unlisted company. If I talk about unlisted company, what is the applicability? Paid up share capital is at least 550 crores. Turnover is at least 200 crores. Outstanding loans and borrowings from banks and PFI is at least 100 crores. What is the meaning of PFI, guys? Public financial institutions. Or outstanding deposits is at least 25 crores. So guys, I'm not talking about and over here. It is not and. Even if one condition has been complied, internal auditor will be mandatory to you. Internal auditor will be mandatory to you. So tell me, guys, all the 4 conditions again. Number 1, paid up share capital 50 crores. Then turnover should be 200 crores. Outstanding loans and borrowings from banks and public financial institutions should be 100 crores or more. And last is outstanding deposit should be 25 crores or more. I'm talking about or any one of the conditions. If it is applied, internal auditor will be mandatory to you. Okay, sir. Now next is private company. If I talk about private company Private company are obviously not allowed to accept deposits, so deposit rule will not be applicable. Turnover should be 200 crores or more. Outstanding loans and borrowing should be 100 crores or more. Even if these two conditions satisfied, I'm talking about or, internal auditor will be mandatory for the private company. Now the important question is, who can be an internal auditor? CA, he could be a member of ICA. It could be a practicing or non-practicing CA can become an internal auditor. Number 2, you all can become an internal auditor. And number 3 is other professionals decided by the board can become an internal auditor. Okay, sir. Now, within 6 months from the commencement of this section, when the section came into place, within 6 months, whichever companies have to appoint internal auditor, they have to appoint internal auditor. Next is role of audit committee. So audit committee in consultation with the board can define how should the audit be conducted, what is the scope of internal audit, where can you do your internal audit. Next is how should the audit be conducted, functioning of audit, and last is how often the audit should be conducted. So audit committee in consultation with board can instruct the internal auditor that we need internal audit of XYZ areas, because over here possibility of fraud is much higher. Chalo guys. Now exception is, this is not important guys, it's not in your notes, but still we will read. For specific IFSC public private company, section 138 applies only if AOA provides. Guys, these are companies that has got a lot of major international transactions. So if any company has got a lot of international transactions, they are called as IFSC company. Now they bring a lot of revenue to the government. Their structure of working is very different. So government gives them exemptions. If you have observed, in many sections, these companies have got an exemptions. Okay. So guys, tell me one thing. If a question is asked in your exam with respect to internal auditor, will you be able to write the answer? We know to which companies internal auditor is applicable. We know board in consultation with the audit committee will decide how the audit should be conducted, who can become an internal auditor. Every single thing we have understood. Jayanand, Simantini, everyone who is watching this right now, can I get a thumbs up guys? Now let's come over here. Stat audit. Very, very important. So guys, let's come over. Yes. First auditor. Now I'm talking about stat auditor, not cost auditor, not a cost auditor, nor secretary auditor, nor internal auditor. I'm purely talking about stat auditor. Okay guys. So stat auditor must be appointed by the board within how many days of incorporation? Within 30 days of the company incorporation, board have to appoint stat auditor. If board fails to appoint stat auditor, members can appoint stat auditor within 90 days in the EGM. Can anyone tell me in the chat box what is the meaning of EGM? EGM means whenever a general meeting of shareholders is conducted between two AGMs, it is called as extraordinary general meeting. Whenever matters are very important, urgent, special, in that case, we cannot wait for the year to get over to hold AGM. We have to hold general meeting of shareholders immediately. So that meeting is called as EGM. So if the board does not appoint internal auditor within 30 days of incorporation, shareholders can appoint stat auditor within 90 days in the EGM. In the EGM, they can appoint within 90 days. Okay, sir. Now, sir, tell me one thing. Once stat auditor is appointed, will he hold office permanently? No, guys. Always remember, stat auditor, if he holds office for a long period of time, there is a very good possibility that biasness can occur. He can prepare the audit, he can make the audit, he can prepare financial statements in favor of the company even if they are going wrong. So, auditor should not have any relationship with the company. Okay. That is why this rule has been made. So, if I talk about individual auditor, the tenure is 5 years. If I talk about a firm, the tenure is 10 years. If my friend who's a CA, if he wants to become an auditor, he can be the auditor of that firm, auditor of that company for 5 years. But if I am a firm, then I can have 10 years of tenure. Okay, guys. So if the auditor is an individual, he can serve as the auditor for how long? For 5 years. If auditor is a firm, then that auditor can become the auditor for how long? For 10 years. Now, once 5 years or 10 years have ended, you have to not be the auditor of the company for 5 years. You cannot be associated with the company. Applies to listed company, unlisted company whose paid up share capital is 10 crores or more, private company whose paid up capital is 20 CR or more, any company outstanding loans, deposits is 50 CR or more, they have to appoint statutory auditor to them. Term and rotation is mandatory. So if in exam, guys, question is asked with respect to the tenure of auditor, you have to write it down. If that guy is an individual, he can serve as auditor for 5 years. If it's a firm, he can serve as auditor for 10 years. Now, once their tenure has ended, they cannot be reappointed. They have to wait for 5 years. Now, I'm talking about this rule for which companies? Applies to listed companies, unlisted public companies, private company, any company whose outstanding loans and deposits is 50 crores or more. Now, members can resolve to rotate audit partners or reappoint or appoint joint auditors. What is the meaning of this, sir? If I am appointing a firm as an auditor, if I am appointing ABC Limited is appointing XYZ auditors. Okay? So ABC can among themselves decide that for year 1, X will be the auditor. For year 2, Y will be the auditor. For year 3, Z will be the auditor. Because we want an independent judgment. We don't want auditor to get very, very close with the company, because of which he can give biased judgment. Or if the company is so big that it cannot be done by one firm, company can appoint joint auditors also. Janan, period of AGM we're going to understand tomorrow. Okay? Exactly, Janan, can you explain me the question of AGM? Chalo guys, let's continue. Everyone watching, right? How many people are watching? Yes, guys. Jan, please tell me your question in little detail, okay? Chalo. Now let's talk about, guys, casual vacancy. Section 139, subsection 8. If due to resignation of the auditor, the position of the auditor is vacant, in that case, board can fill the position of the auditor within how many days? Within 30 days. And members must approve within 3 months. Now guys, simple. If the auditor resigns, the board must fill the position within 30 days and it should be approved by the members within 3 months. Okay, sir. If other reasons, board fills within 30 days, we know this, hold office till the next AGM. Was he approved by shareholders? No. He was appointed by the board, but he will hold office till the AGM. In AGM, shareholders will decide, shall we continue with this guy or not? Okay, guys. Chalo. Next is section 139. So, appointment of auditor in the first AGM. Now, the moment in AGM auditor is appointed, you tell me for how long he can hold office in the company. If it's an individual, he can hold office for 5 years. If it's a firm, they can hold office for 10 years. Audit committee and board. Now, before the auditor becomes the auditor of the company, audit committee and board will check the qualification. Does he have a CA degree? What is his experience? Will he be able to do the audit of such a big company? Pending discipline proceedings. Is any case pending against this guy or not? Okay, sir. Now that the auditor has been appointed, now he should also give a written consent that I give consent to act as the auditor. He should also give an eligibility certificate. We're going to understand what is the meaning of eligibility certificate. Company files ADT 1 within 15 days of appointment of the auditor with the ROC to inform that we have appointed the auditor and this is the board resolution. This is the annual general meeting resolution confirming that you have followed all the rules and regulations. Okay, sir. Next is government companies. If I talk about government companies, appointed by Controller and Auditor General of India within how many days? Within 180 days from the financial year start. So, if I talk about government companies, auditor has to be appointed within 180 days from the financial year start. First auditor is appointed within 60 days of company incorporation. If not, board members will appoint. Casual vacancy should be filled by Controller and Auditor General. If not, then board can fill the casual vacancy. Everyone tell me, Controller and Auditor General of India have to appoint auditor within how many days? Within 180 days from the financial year start. And the first auditor shall be appointed within 60 days of registration. And if not, the board members will approve. Yes. Casual vacancy shall be filled by Controller and Auditor General of India. If it could not be filled, then who will fill the vacancy? Board of Directors will fill the vacancy. Okay, sir. Next is reappointment. So, the retiring auditor can be reappointed if no SR has been passed to appoint another auditor. So, guys, simple. Let's take an example of individual auditor. You know for how long he can serve as auditor? For 5 years. So 1 year is done, second year is done. So every year he will be reappointed by the shareholders. So a retiring auditor can be reappointed if no SR has been passed to appoint another auditor. So if shareholders have passed a resolution that we don't want this guy, we want some other guy, then this guy cannot have the position of the auditor. Next is no unwillingness notice. He consents to act as an auditor, completely fine. He is not disqualified to act as an auditor, then he can be reappointed. So everyone tell me, guys, when can an auditor be reappointed? If 3 conditions satisfied. Number 1, no SR has been passed to appoint some other auditor in his place. Number 2, auditor has given no willingness notice. So that means what? He has given consent. And third is he is not disqualified to act as an auditor, then he can be reappointed. Now if no new appointment has been made, then the existing auditor will continue. Very easy, guys. Okay. Now let's talk about removal and resignation of auditor. Section 140. Very, very important. So if you want to remove the auditor before his term has ended, if I talk about individual, it will be 5 years. If I talk about a firm, it will be 10 years. If I want to remove the auditor before the term, then it requires central government approval and special resolution. Because it's a serious matter. If an auditor is resigning, that means something wrong is going on in the company. You have to take the approval of the central government. Then once the auditor has resigned, he must file ADT 3 with the ROC and CAG if it's a government company within 30 days along with the reasons why I have resigned from the company. Penalty for delays, guys, 50,000 rupees is the penalty, or audit fees, whichever is less will be the penalty applicable to the auditor, and 500 rupees per day, maximum is 2 lakh rupees. Now special notice is required to replace a serving auditor before his 5 or 10 years term. We are going to understand what is the meaning of special notice. Just understand this one thing, that if we want some other auditor to take place before the original auditor's term has ended, it's a serious matter. It will require a special notice. Okay. Now let's talk about special notice. Appointment of auditor other than the retiring auditor requires special notice. Let's see this, guys. So when is special notice required? So if members appoint a new auditor instead of the retiring auditor, special notice is required because it's a serious matter. Everyone shall be involved. Next is members expressly prevent reappointment of the retiring auditor. So this guy is getting retired. So company by a special resolution appoint some other guy, that we don't want this guy, we want some other guy, then guys you will require a special notice. So in 2 cases special notice is required. Number 1 is appointing a new auditor in place of retiring auditor, and number 2 is shareholders have expressly prevented this guy to continue as a retiring auditor. Timothy is asking, in case of first auditor, CAG will appoint auditor within 60 days, and in case of subsequent auditor, within 180 days. Let's come over here, Simontini. See, first auditor shall be appointed within 60 days of registration. Yes, correct. Simontini, perfect. Within 180 days, you have to appoint. Can we have a break? Oh. Guys. Okay, what we'll do is, we'll complete this topic and then we'll take a break. Done? Jayanan, we'll complete this topic and then we'll take a break. So guys, tell me, in what cases special notice is required? Number 2, members have appointed a new auditor in place of retiring auditor, or members have clearly told that we don't want this guy to continue. Now, when special notice is not required, if the retiring auditor has completed his maximum consecutive tenure, if I am the auditor, I have completed my 5th year, can I become the auditor of the company again? No. 5 years has ended. In the same way, if I am a firm, 10 years have ended, will I require special notice to replace me? No. Okay. That's it. Now, procedure for receiving special notice. Company has to send a special notice to a retiring auditor. Company forwards notice to the retiring auditor. Okay. Number 2, auditor has to give a representation that we want to hear everything about the auditor. Does he has got anything to say? Something, is it suspicious that he wants to say or not? So auditor sends a written representative to the company that people are trying to remove me because of X, Y, Z reasons. Every shareholder should know this. Company must, if required by auditor, mention the fact of the representation in the notice of meeting. So auditor has given written representation in the meeting that why people are trying to remove me. Now company's job is to send this notice of representation to all the shareholders. Number 1 option, send copy of representation to members who received AGM notice that please listen to this guy, he has got something to say. If not sent, file a copy with the ROC that why have you not allowed sending the written representation to the company? Why did you not allow the shareholders to hear this guy's written representation? So guys, tell me one thing. Company must, if required by auditor, send written representation to all the shareholders in 3 cases. Number 1 is mention the fact of representation in the notice of meeting. Okay. Send a copy of representation to the members who have received AGM notice, and if not sent, you have to tell the reason to ROC that why have you not sent. Now, rules for representation. So whatever the auditor has to say, it has to be very short and to the point. It should reach the company on time so that we can circulate his written representation to everyone. Number 3, auditor can ask to read it out in the AGM. Now, is it mandated to everyone to read it out? No. If members were not notified due to late receipt or company's fault, they are not required to read it out. Next is exception. If tribunal is satisfied that auditor is abusing its rights, just because auditor has the right to send his written representation, he cannot say anything, he cannot blabber. Okay, so representation need not be read out or sent. If that written representation is going to cause chaos in the company, it's completely fine even if you don't read out the written representation. Chalo guys. So we'll take a break of 5 minutes over here. Okay, chalo. 5 minutes break. 7:09 p.m. Yes, guys. Shall we begin? Guys, I've got a fever today. That is why you might realize that, you might observe that my energy level is not the same as it was yesterday, guys. Okay? Chalo. Shall we start? Shall we start? Shall we start, guys? Chalo. Now let's talk about removal of auditor before term. Again, we are repeating this topic. When can you remove? Company can remove an auditor before the end of the term. How removal happens? SR must have been passed and prior approval of CG is mandatory. Okay, guys, chalo. Procedure. If you want to remove the auditor, you have to first apply to CG. You have to file form 882 within 30 days of BR. BR means what? Board resolution. General meeting have to be passed within 60 days. And you know, SR will be required to remove the auditor. Third is, auditor should be given a right to be heard. Why are you going to remove me? Everybody should know. Are you doing some kind of fraud that I have noticed, which is why you are removing me? Must be given a reasonable opportunity to be heard to explain or defend before the removal. Okay, sir. So 3 steps are required to remove the auditor. Number 1, you're going to apply to CG in which form? You have to file 882 within 30 days of passing a BR. Now that you have passed a BR, you have to pass an SR in the general meeting within 60 days. And in the general meeting, auditor has to be given a right to be heard to explain or defend before the removal. Easy now, guys. Very easy. Next is filing of resignation. Now that auditor has resigned. Let's read this. If it is a government company or government control, file to company, registrar as well as CAG within 30 days of resignation that I am resigning. These are the reasons. File to company and register if it's not a government company within 30 days of resignation. Penalty. If the auditor files 883 little late or it does not files, then initial penalty will be 50,000 rupees or auditor's remuneration, whichever is less will be the amount of penalty. And if it is continuing, guys, 500 rupees per day after first day. Maximum is 2 lakh rupees. Easy now, guys. Everyone, can I get a thumbs up? Auditor must submit a statement in form 83 along with the reasons and facts. Okay. So in 83, you have to do this. Who is going to do this? Auditor will do this. Easy now, guys. Now tell me who is going to file 882. This will be filed by the company and this will be filed by the auditor. Easy, guys. Everyone, are you with me? Now let's talk about eligibility and qualification of the auditor. Who can be an auditor? Guys, I told you in the initial itself, if I am talking about an auditor, it is always stat auditor. If you want to become a stat auditor, you have to be a chartered accountant or a firm which has got majority partners as CA. If a firm has got only 1 or 2 CA, remaining all are from other professionals, not allowed. Majority partner of the firm should be a CA. Okay, sir. Includes LLP also. Only partners who are CAs in a firm can sign on behalf of the firm. So the firm has got CS, CMA, CA. Does that mean just because the firm is the auditor, does that mean that CMA or I can sign on the auditor's report? No, only a CA can sign on the auditor's report. Next is disqualification, section 141, subsection 3. Individual and firm cannot be appointed. People, this is very, very important. I will ask you a case based question on this. Body corporate and it should not be an LLP. Understood, guys? You cannot be a body corporate, but LLP is allowed to be an auditor. Over here, just write except for LLP. Next is if you are the officer or employee of the company, if you are the partner of the officer or the employee. Next is if you are holding securities or interest more than 1 lakh rupees. If you are indebted to the company for more than 5 lakh rupees. If you have given guarantee or security for a third party to the company, 1 lakh, more than 1 lakh. If you have got any money relationship, business relationship, you cannot be an auditor. But there is an exception to this. Professional services allowed by CA. if it is ordinary course of business. Let's take an example of Indigo Airlines. So Indigo Airlines is an airline. Now, does that mean that the CA of the Indigo Airlines cannot purchase the tickets of the airlines? It doesn't make sense, right? So the CA can purchase the tickets of the airlines provided every single thing is happening on arm's length basis. If the CA gets a ticket at a very less value, that means he cannot be an auditor. Okay, guys? So there should not be any business relationship. Exception is ordinary course of business is completely fine. Next is, he is a relative of the director or KMP, not allowed. He is a full-time employee somewhere else, appointed as the auditor for more than 20 companies. Now he cannot become an auditor. He is convicted of fraud. And last is, he has rendered prohibited services. We are going to understand what is the meaning of prohibited services. So 12 conditions for disqualification. Everyone clear now, guys? Will you be able to learn using the mind map? Chalo. Next is vacation of office. Disqualified after appointment, vacancy is called as a casual vacancy. You have become the auditor, but suddenly you have fallen under 8 categories. That means your position should be vacated. There will be a casual vacancy of the auditor. Now you know how the vacancy will be filled. Okay, this is done. Now comes remuneration of the auditor, section 142. Who fixes remuneration? General meeting of members will fix the remuneration, usually fix the auditor's remuneration. Board can also fix, but only for the auditor who is the first auditor. I told you guys, will shareholders appoint first auditor in the company? No. General meeting. In general meeting, first auditor will not be appointed. Subsequent auditor will be appointed in a general meeting. But the first auditor will be appointed by whom? By the board. Always remember, guys, to call an AGM, it takes a lot of time. We cannot wait for that much amount of time to appoint an auditor. So that is why board has got the power to appoint auditor by themselves. So while they are appointing the first auditor, they can also fix the remuneration. Okay, guys. Next comes scope of remuneration. Covers audit only. So remuneration should cover only audit only. Out of pocket expenses for audit are paid. If the auditor has expended traveling expenses, that expenses shall be reimbursed. Next is, does not include fees of other audit services provided to the company. Only the stat auditor services remuneration will only be taken into consideration. Other services remuneration will not be taken into consideration. So remuneration will be 3 things. Number 1, covers audit only. Number 2, out of pocket expenses are allowed. And number 3, remuneration will not include services provided to auditor apart from audit services. Easy now, guys. Chalo. Now let's talk about auditor's right to access books of accounts. Basically, he has got the right to access all the books of accounts of all the companies as well as subsidiary companies. Let's read this. All locations auditor can has access to books of accounts and vouchers, not just registered office. Even if the company has got a subsidiary company, associate company, JV, auditor has a right to inspect books of accounts. Ensures auditor can fully verify the company's financial records. Okay. Next is holding company auditor have right to access books of subsidiary and associate company. Okay, guys. Chalo. Now let's talk about duties of auditor. How many topics are remaining? 1, 2, 3, 4, 5 topics are remaining, guys. Within 15 minutes, we will be done. Okay? Chalo. Duties of auditor, number 1 is he has to give declaration with respect to all the items. Number 1 items is whether all the necessary information and explanations were obtained or not. If not, what is the impact of not obtaining those information on the financial statements? They have to mention so that shareholders will know that the impact is very less. Next is observations and adverse comments. Any matter that is impacting company's functioning must be reported immediately. Third is he will report on whether proper books of accounts were maintained or not, whether proper returns have been received from the branch office or not. If not, visited. Now people, let's read this point. Company might have a lot of branch offices. It is not possible for the auditor to visit all the branch offices. Yes or no? So auditor has to prepare, first of all, check the books of accounts of the main company. Number 2, if the books of accounts have been prepared by some other guy in the branch office, Now auditor has to give a confirmation also that I have also checked those books of accounts which I have not visited. Okay. Now branch office books of accounts, very important. The branch audit reports have been prepared, that has been sent to him or not. I told you guys, if branch office books of accounts has been prepared by some other guy, auditor has to also check those branch office books of accounts. He has to give a declaration that I have checked branch office books of accounts. Okay, sir. He has to give a declaration that has the company books of accounts and profit and loss account, balance sheet, every single thing is aligned or not. Next is compliance with the accounting standards. Has any director been disqualified? Then people, internal control, financial control system, is it strong or not? Based on checking of everything, auditor will either give a qualification, give a reservation, or give an adverse remark. Sir, what is the difference between qualification, reservation, and adverse remark? Qualification means what, guys? Everything is okay except for one thing. This is called as qualification. Yes, but something is missing. Reservations means what? I have not checked certain books of account because it was not available. I cannot comment anything on that. This is called as reservation. And last is, guys, adverse remarks. Company's report cannot be trusted. Company's books of accounts cannot be trusted. Easy, guys. Did you understand the difference between qualification, reservation, and adverse remarks? Jayanand, Simantani, everyone, let me know in the chat box. Now, which company does not require such huge amount of disclosures? OPC, small company, any company which has got a turnover of less than 50 crores and borrowing is less than 25 crores in the preceding financial year need not required for private companies. Easy, no, guys? Chalo. Now let's talk about test audit, supplementary audit. Okay, what is the meaning of supplementary audit? Audit has been done, but government feels that one more time audit should be done. This is called as supplementary audit. Example, let's say we are preparing supplementary audit of Air India. So government wants to check that if environmental laws were followed or not. So government will initiate another audit that is called as supplementary audit. CAG has a right to conduct supplementary audit for the financial statements. Company must provide comments and supplement with the audit report within 60 days of auditor's report. So financial statements they have to prepare. Okay, audit report they have to prepare. But apart from the audit report, they also have to now disclose a supplementary audit report details within 60 days of auditor's report. Because everyone shall know, guys, what's inside the supplementary audit report. Then any CAG comments or supplements has to be sent to all the persons who are entitled to receive financial statements. It should also be placed before the AGM alongside auditor's report. That is the original. Simple, guys. Government has ordered supplementary audit. Don't you think shareholders must know what exactly is the content of the supplementary audit? They have to mention all the details. Okay, sir. Next is test audit. Now government realized that some aspect of some area of the company need to be audited again. We cannot completely rely on the company's audit. We have to check one part where I think fraud can happen. That is called as people test audit. CAG can order test audit on the companies, applies to report of such test audits, ensuring proper accountability and procedure is followed. So guys, basically just understand the meaning of test audit, that's it. Okay. Now appointment and direction. CAG may, while conducting supplementary audit or test audit, may appoint the auditor. He can direct how the audit should be conducted. Don't do the audit in the same way like you did before. I want a specialized way of doing audit. Then appointed auditor must submit the audit report to the Controller and Auditor General of India. Everyone, guys, are you with me? Chalo, guys. Shall we move forward? Now, how are you going to report fraud? If you are the auditor, how are you going to report fraud? First of all, you have to talk to the board of directors and committees. When the auditor notifies a fraud, he must send a written report to the board and the audit committee. Okay. Board and audit committee gets 45 days to respond. Now we have received a report of the auditor that something wrong is happening in the company. We have got 45 days to respond. Now guys, the fraud is less than 1 crore. The auditor only reports it to the board or the audit committee and mentions it in the audit report, not going to central government. If the fraud is less than 1 CR guys, then auditor only has to go to board or the audit committee, not to the central government. But what if the fraud is more than 1 CR? In that case guys, auditor must report to CG using the prescribed form, and that is 884. Now the important question is, within how many days you have to report the fraud? If board has responded to the report, then within 15 days you have to report to central government. If the board has not responded to your report, within 45 days from the end of within 15 days from the end of 45 days. People, let's look over here. You have given a report to the board or the audit committee. You have got 45 days to wait. 45 days to wait. Now, if board gives you the reply within 15 days, if board does not gives you the reply within 15 days. Okay? So if the board responds to your reply within 10 days, 15 days, within 15 days, you have to report. The board has not responded, you have to wait for 45 days, and then within 15 days, you have to report. Okay. Always disclose in the main audit report. The auditor must include details of the fraud in the final audit report. So guys, if an exam question is asked, how are you going to report fraud? If you are the auditor, you have to write down all the 5 points. You have to write down all the 5 points. Easy, no guys? Chalo. Now let's look at section 144. What are services are prohibited? Number 1 guys, if you are the auditor, you cannot provide accounting and bookkeeping services. You cannot provide internal audit services. You cannot design or implement financial information system. You cannot act as an actuarial services. You cannot act as an investment advisors, investment banking, outsource financial services, management services, any other services. Now, the reason why these services are prohibited is because when you provide these services, there is a chance of biasness in the audit report. Somewhere, providing these services will have an impact in the audit report. That is why government has specifically excluded these items from being done by auditor. Auditor cannot provide following services directly or indirectly. Cannot provide services to holding company as well as subsidiary company. Very, very important guys. I'm going to ask a case study based question purely on this. Purely on this, I'm going to ask you a case study based question. Chalo. Can I get a thumbs up guys, everyone? Everyone guys who all are watching, can I get a thumbs up? Chalo guys. Now let's look at the Caro report. Yes guys, Caro report. Basically, a detailed way of preparing financial statements is called as a Caro report. So, it's a reporting issued by MCA, replaced Caro 2016, applicable to those audits from 2020-2021 onwards. Okay, it applies to most companies, including foreign companies. To all the companies, Caro report is applicable, except for a few companies. Which are those? Banking, insurance, Section 8 company, 1% company, small company, and certain private company who are complying with all the 4 conditions. Paid up capital, reserves and surplus do not exceed 1 crore rupees. Next is total borrowing does not exceed 1 crore rupees. Total revenue shall not exceed 10 crore rupees. The company is not a holding company or subsidiary company of a public company. If all the 4 conditions are satisfied, company is not required to provide Caro report. Otherwise, all the companies have to prepare a Caro report. Okay, guys. So tell me to which companies Caro report is not applicable? Banking, insurance, Section 8, 1% company, small company, and certain private companies. Paid up capital, reserves surplus less than 1 CR, borrowings from banks and financial institutions should be less than 1 CR, revenue shall not exceed 10 CR, and company should not be a holding company as well as subsidiary company. So guys, these are the reporting requirements. In your notes, you will find that I have also explained using the example. So you don't end up mugging. Just learn 5 to 6 items and then you are sorted. Number 1 is people, property, plant, equipment, inventory, loans, guarantees and securities, acceptance of deposit, cost record, stat dues, all these matters have to be reported in the Caro report. Okay, so over here guys, we are done with the chapter. Now let's start solving questions. See guys, I have also marked previous year's question, model question, which question has come. Chalo guys, direct question. Analyze the provisions of internal audit under section 138. First, you will write the intro as per section 138. Then you will write down the provisions to which companies internal audit is applicable. 1, 2, 3. Who can be internal auditor? Scope and functioning. Transition provision. Within 6 months from commencement of section 138, all the companies have to comply, to which internal audit is mandatory. Jayanand, sir, if you're not well, you may please continue tomorrow. Jayanand, we have got a lot of portion to complete. Okay? It's completely fine, guys. We are done with the syllabus. So we are done with the chapter. Okay, guys. Next is, question is direct question. Explain the provisions of right of members to receive copies of audited financial statements. Tell me, guys, which section? 129, financial statements, and 136, right of members to receive financial statements. Provisions. First, you will tell that everyone has got a right, documents to be attached, time limit. Let's read this one by one. A copy of financial statements shall be sent to every member, debenture trustee, and entitled person. We know this. Documents to be attached. The financial statement shall include auditor's report and CFS. We also know this. Third is time limit. 21 days before the AGM. It could be sent late if 95% consent. Special provision for listed companies. They can provide summarized salient features in which form? AOC 3. They don't have to send the entire financial statements. Even if they send in a summarized manner, it's completely fine. Members have the right to demand full financial statements. If members are demanding, you have to give them. Right of inspection. Every member, debenture trustee, has the right to inspect. Okay. Mode of sending, electronic mode, physical delivery. Listed companies must place financial statements in their website. That's it, guys. All these questions have come in your PYQs and model questions. So you have to be thorough with these answers. Okay? Chalo. Next is disqualification of auditor of a public company, guys. You would write down section 141. Body corporate, office of company, interest, business relationship, relative or director KMP. So all these points just now we have discussed in section 141. You have to write it down. Okay, sir. Next is RERA Limited. 100 crores turnover, net profit 3 crores, accumulated losses of 50 crores. And securities premium is 300 crores. Do you think CS is mandatory to them? No. Tell me the provisions of CSR. Turnover 1000 crores, net worth 500 crores, and net profit 5 crores. So nothing is crossing the limit, then CSR is not applicable. That's it, guys. Chalo. Now, Gajendra is appointing stat auditor for financial year 21-22. Examine the following persons are qualified to be appointed as an auditor. Number 1, Mahendra holds shares in an associate company. Is it allowed, guys? Dinesh's son owes 99,000 rupees to the company. Rajendra was convicted for fraud in 2005. Now, you have to write down the provisions as per the section 141 of the Companies Act. Certain persons are disqualified. Mahendra. A person is disqualified if he holds security in associate company. Therefore, Mahendra is disqualified. Dinesh, disqualification arises only if the transaction exceeds 5 lakh rupees, but transaction only 99,000 rupees, guys. Hence, he is qualified to act as an auditor. And last is Rajendra committed in 2005, and 10 years have not been over since he has come out. Hence, he is also not liable. Guys, I want you to read my marathon notes question once these marathon lectures are over, guys. Okay? One more thing I want to tell you, just don't take this question into consideration. Okay? Don't take this question into consideration. I will update in my Google Drive. I will remove this question. This question is wrong, guys. Okay? So we are done with the accounts and audit. Next is, guys, very small chapter, but we will take a break of 5 minutes. Okay? 5 minutes break. We'll meet at 7:39 p.m. We'll meet at 7:39 p.m. Sir, who are interested person? Jayanand, which topic are you referring to? If you are referring to the topic of Jayanand, which topic are you referring to? Just let me know in chat box, so I will explain you accordingly. Okay? So guys, we'll take a break of 5 minutes. Sir, when can you upload mind maps of 4th and 5th day in a drive? Simantini, what I will do is, problem is I'm not getting sufficient time to send you the mind maps. Okay? I want to send you in a manner that is readable. Okay? So just give me time till the marathon lectures end. Once these marathon lectures end, no, immediately next day I will send you all the mind maps in Google Drive, and I will update you on our group that mind maps have been uploaded. Okay, guys? Sending financial statements. Okay. Let's look over here. So basically, Jayanand, whoever really requires financial statements, to them you will send them full financial statements, but those who don't require financial statements, you will send them the salient features. I'm talking about listed company. You will send them salient features of in form AOC 3. Okay. If people are not interested, then you will not send them. If the ones who are interested, you will send them. Chalo, guys. Yes, guys, shall we start? Sir, your PDFs, mind maps is very helpful. Thank you so much, Hemantini. Chalo, guys. Now we're going to complete up with a small chapter. It's going to take 15-20 minutes. That's it. Prevention of operation mismanagement. Chalo, guys. First of all, tell me, what is the difference between operation and mismanagement? Operation means what? When the majority shareholders are conducting business in an unfair manner, that is impacting the minority shareholders, it is called as operation. Unfair, abusive treatment of minority shareholders by majority. So example is not giving dividends to minority shareholders intentionally, or removing the minority shareholders directors intentionally. So if you are not fair with all the shareholders, it is called as operation. But if we talk about mismanagement, guys, company is running in a way that is fraud. It is not in the best interest of the company. Company is run in a bad and very irresponsible manner. Example is Kingfisher Airlines was run in a very bad and irresponsible manner. Fraud is happening. Then it is called as mismanagement. Now, who can complain if operation is going on, mismanagement is going on? Number one, people eligible minimum shareholding. Company without share capital, company with share capital, and central government. 3 categories of people can complain against operation mismanagement under section 244. Now, if a company is not having a share capital, then 1/5 of total number of members can complain under section 244. But if the company is having share capital, lowest of the following, it could be 100 members, it could be 1/10 of the total members. I'm not talking about value at all. 100 members, 1/10 of total members, members who are holding 10% or more share capital, they can complain. And last is NCLT may permit less if required. Even if you don't comply with the conditions, still you can file complaint under section 244 if NCLT allows you to do so. So 3 categories of people can file a complaint. Number one is 100 members, 1/10 of total number of members. Then people who are holding 10% or more share capital in the company, lowest of the following can file a case, can raise a complaint under section 244. Now guys, if I'm talking about share capital, members should have paid all the dues on time. If members have not paid all the dues on time, they don't have the right to file a complaint. First, you rectify yourself and then you complain against the company. Understood, guys? Now, we also know central government can also complain. Now, let's understand. When central government steps in, they can apply. If, in central government's opinion, fraud or a breach of duty is happening in the company, business is not run as per the right principles, business is conducted to defraud or cause injury to the shareholders, in that case, central government can file an application under section 244. Next is CG files an application with the tribunal along with the statement of circumstances. Why am I filing application? What have I found about the company? It should be signed and verified. So if central government is filing an application, it should be signed and verified by the central government. Tribunal now, when they receive the complaint from the central government, they will investigate and they inquire into the matter of the company. They will check if the people who are holding the top management of the company, are they even fit to be in that position? Is something wrong with the directors? Are directors trying to defraud the members or not? So all these 2 things will be checked by the tribunal, and based on these 2 things, tribunal will hear a case, records decisions, whether director shall be removed or not removed. Person is not fit, the director is a fraudster, Vijay Mallya. Can you appoint Vijay Mallya as a director? No. Cannot hold office. Once central government informs that you cannot hold office, you cannot hold office for 5 years if central government feels that you are not fit for the company. If central government feels that you are not fit for the company, you cannot hold office for 5 years. Next is cannot be appointed again unless you take the permission of the tribunal. And third is you will receive no compensation for loss of office. You will receive no compensation for the loss of office. So 4 steps. Number 1, central government will apply in its opinion, then process, tribunal, decision. Now when the central government when the tribunal passes a decision that this guy is not fit to act as a director, he cannot hold office for 5 years. He is disqualified. He cannot be appointed again unless he takes the permission of tribunal. And last is he will not get any money for the loss of office. Easy now, guys. Everyone. Chalo. Next is when can application be made? Section 241. Now we understood that who can file application. We understood who can file a complaint. Now we're going to understand when can application be made. If conduct in the company is not good at present, or it is good at present but not good in the future. Present misconduct or future misconduct. Affairs are conducted in harmful manner. Number 2, unfair to its members. Third is harmful to the company. This is called as present misconduct. Present misconduct means 3 things. Number 1, harmful to public interest, harmful to members, harmful to company. Likely future misconduct. Change in the management or control. Somebody else who's a fraudster has taken the place of management. Now shareholders are feeling that now the company cannot be run in a right manner. Or likely things become unfair to members in the future. If that is the case, then members can go to tribunal. Tribunal must feel that 2 things are happening. Tribunal must feel 2 things once tribunal receives application. Number 1 is something really wrong is happening in the company. If tribunal feels, plus this is the most important part, tribunal feels that we cannot close on the company. If we close on the company, it will be unfair to all the employees, creditors, everyone. In that case, tribunal will come in between. In that case, tribunal will come in between. So guys, where can they go? They can go to tribunal. They must feel 2 things. Number 1, there's something wrong is happening in the company. Number 2, we cannot wind up the company. Now, what can tribunal do once they hear this application? They can control the entire company, how it is run. Number 2, it can order to purchase the shares of all the minority shareholders so they don't have any problem. Number 3, they can stop transfer or allotment if transfer or allotment is going to cause harm to the minority shareholders. Number 4, change or cancel the agreements between company, director, MD, manager, others. If company has entered into an agreement to pay huge amount of money as a salary to the MD, manager, director, and company has got no money in its bank account, in that case, guys, it is not fair to the shareholders. So tribunal can ask to cancel or change the agreements. Next is remove director. Tribunal can also order to remove director. Next is appointing new ones. Reverse a fraud transaction, same way that we have understood in IBC, how the transaction can be reversed. Next is order cost recovery. So whatever expenses have been incurred by the people who have filed a case, they must have incurred some expenses. Tribunal can order the majority people to reimburse all the expenses back to the minority. And last is any other order. So 9 types of order. Will you be able to write in the exam, guys? Everyone, can I get a thumbs up? Every single one who is watching, can I get a thumbs up? Can you write all the 8-9 points? If in exam question is asked, what can tribunal do? What are the powers of the tribunal? Okay. Now that tribunal has passed an order, company has to file a copy of tribunal order with whom? With the registrar within 30 days of order of the tribunal. Now consequences. Section 243. You know this already. Persons is not entitled to compensation. Whoever did fraud, he will not be given any money for loss of office. Number 2, disqualified for 5 years for appointment. Easy now, guys. See, mind maps, I made it so easy that even if you just give 15 minutes, you will be done with the chapter of operation mismanagement. Okay. This is the last topic, guys. Class action suit. What is the meaning of class action suit? Till here we have understood who can do what. But we never understood how can the person file a case. Can one person file a case on behalf of everyone? We're going to understand. Class action suit. A group of members or depositors file one case together. They're not filing random multiple cases. Only one case is filed against the company. Anyone can file, members can file, or depositors can file. If we talk about the members, company with share capital, company without share capital. 100 members, 5% of total members, members holding required share capital. Now, if I talk about listed company, guys, 2% shares shall be held by them. If I'm talking about 100%, if I'm talking about unlisted company, 5% shall be held by them. You have not understood anything. I am 100% sure. Let's again understand them. Who can apply? First of all, company with a share capital, 100 members or 5% or members holding required number of shares. If I talk about listed company, 2% shares shall be held by the members. If I talk about unlisted company, we know 5%. Only listed company, you have to remember the limit. Otherwise, everything is same. Next is, guys, company without share capital, 1/5 of total members. Okay. Now, if I talk about the depositors, we have understood about the members. If I talk about the depositors, 100 depositors or 5% of total depositors, or depositors holding 5% of value. Guys, you have to understand this by any chance. You have to learn them, guys. See, I have done your job very easy by preparing a mind map. All you have to do is every day in the morning, just give 15 minutes to read the limits. That's it. Okay. So if I talk about members, company with share capital, 100 members, 5% of total members, or if it is listed company, 2%, if it is unlisted, 5%. If I talk about company without share capital, 1/5 of members. If I talk about company, if I talk about depositors, 100 depositors or 5% of total depositors. I'm talking about completely depositors. I'm not talking about value at all. But over here, I'm talking about value. 5% of depositors. Okay, sir. Now, what tribunal does first? He can accept, he can reject. Now, he will accept or reject based on two things. Number one, is the complaint genuine? Is it in the interest of members or company? Tribunal will check and then only he will accept. Okay, sir. Once it is accepted, public notice is sent to all the depositors and members that we have accepted a case of operation mismanagement. Whoever has been affected, they can also send their claims. Only one class action suit is allowed. 10 members cannot file class action suit. They have to file only one class action suit. Similar class action suit shall not be filed. Any one class action suit is only allowed. Similar application is not allowed. Okay, sir. Now, effect. Whatever tribunal passes an order, it is binding on the company, it is binding on the members, it is binding on depositors, it is binding on everyone, basically, auditors and experts. Even those who did not file notice, to them also it is binding. Okay, sir. Now, what all remedies? Tribunal can ask to stop illegal actions, cancel control decisions, stop violation of law, claim damages or compensation, and last is other remedies. So this is, guys, section 245. So we are done with prevention of operation mismanagement. Can we, guys, just solve a few questions of operation mismanagement and then we are done with this chapter? Be with me, guys. Please don't go. The goal is to make you score 70 plus marks. I will do anything to help you reach that goal. Okay, guys, chalo. A group of shareholders holding 20% of issued share capital of DEF Limited has filed an application before the tribunal alleging illegal transactions, losses due to mismanagement and non-declaration of dividend. Now, guys, you tell me, did I tell you yesterday that company has to mandatorily pay dividend? No. So, loss of dividend cannot be a ground to file a case of operation mismanagement. Company is suffering heavy losses. Does that make it a ground to file a case of operation mismanagement? Every company is into losses. That does not mean that company is mismanaging. Then, guys, yes. Now, first of all, tell me, can these people file a case against company? Just tell me the limits. You are going to write the intro. As per section 241, 244 of the Companies Act, members can apply to a tribunal in case of operation mismanagement subject to eligibility and valid grounds. So, provisions. Members holding not less than 10% of issued share capital are eligible to file the application. Relief is granted only when the act is oppressive or oppressive members or prejudicial to the company or public interest. Something wrong should happen in the company. Now, analysis. First of all, they are eligible. 10% is the eligibility, 20% is filing. It is completely fine. Number two, just because company is having some irregular transactions, that does not make it a ground to file a case of mismanagement. You have to show or prove why we are calling it as mismanagement. Just because a company is irregular, that does not mean that it is into mismanagement. Third is, just because a company is into losses, that does not mean that company is mismanaging. Fourth is, non-declaration of dividend cannot be a ground to file a case of operation mismanagement. So conclusion is the most important part of this answer. All those shareholders are eligible to file an application. The grounds mentioned are not sufficient to establish operation or mismanagement. And the petition will fail unless I'm not saying that it will fail 100%, unless it is proved that acts are oppressive and prejudicial. What is the meaning of prejudicial, guys? If it is not as per the actions of the company, it is not as per the interest of the shareholders of the company. Simontini, wait 1 second. Let's come over here. See guys, only one class action suit is allowed. If you file multiple class action suit, it is not allowed. Tribunal will be rejecting this case. Okay. If you are filing class action suit, what is the meaning of class action suit, guys? Group of people are filing one case on behalf of everyone. If you are filing one case on behalf of everyone, does it make sense to file another case? No. Hence, in that case, guys, class action suit is not allowed if you file multiple cases. And next is, if it is not genuine, if it is in the interest of members of company, then guys, first of all, it should be genuine and it should be in the interest of members. If these two conditions are satisfied, then only tribunal will accept the application. Easy now, guys. Everyone, are you with me? Okay. Next question. ABC Private Limited has got, Simondani, let me know if your doubt is clear or not, okay? ABC Private Limited has 8 shareholders. Can shareholder holding less than 1/10 of share capital apply to tribunal for relief against operation mismanagement? Now guys, tell me, what is the limit? In case of company having share capital, members can apply if they are not less than 100 members, if not less than 1/10 of total number of share members, members holding not less than 1/10 of issued share capital. Tell me again, guys. 100 members, 1/10 of total members, at least 10% of share capital. Okay, guys. Analysis. How many members are there? Total number of members is 8. 1/10 of 8 is, guys, 0.8. 0.8, we know as per company that it will be rounded off to 1. That means one member is also sufficient to file a case of operation mismanagement. Okay. Therefore, even if a member holds less than 1/10 of share capital, it is completely fine. He can apply based on the number of members criteria. Now, the important question is, what if members are not sufficient? Can the tribunal still accept the case? Yes. If tribunal feels that this case shall be accepted, tribunal can easily accept the case. But tribunal should feel that he should accept the case. Okay? Chalo. Now guys, last question and then we are done. Mr. Satish, a shareholder holding 1,10,000 equity shares. How many shares is he holding? 1,10,000 equity shares. In a listed company, having total 15 lakh shares, was removed as a director. He files a petition under section 241 and 244, alleging operation. Examine whether the petition is maintainable and state the remedy available. Now guys, let's go back to the section 244. Where is it? Section 244. See guys, if it's lowest of the following, 100, 110, 10%, NCLT may permit if lesser is satisfied. So guys, tell me one thing. Now read this. 1,10,000, is it 10% of 15 lakhs? No. 10% of 15 lakhs is, guys, 1,50,000 shares. So if he is holding 1,50,000 shares, then only he can file a case. Otherwise, he cannot file a case. If he want to file a case, he must get the consent of the tribunal. Now guys, I want you to read this down. Provisions. In case of a company having share capital, members can apply 100, 1/10 of issued capital. The tribunal may waive these requirements on the application of member. The total number of issued capital is 15 lakh rupees. 1/10 of it becomes 1,50,000 rupees. but Mr. Satish is holding 1,10,000. Hence, he does not comply with the eligibility criteria. However, Mr. Satish may apply to tribunal for waiver of eligibility requirement, and if such waiver is granted, he can file a case. That's it, guys. We are done with the chapter of prevention of operation mismanagement and accounts and audit. Guys, sincere request to you, please read from the mind map. It is the most important thing that you can do before revision. Because CMA final module or whatever notes you're referring to, it is very big, guys. It is not possible for you to revise everything before the exam. So, using these mind maps, you will not have the same problem again. Quick revision will happen and still you will be able to cover all the points. Okay, guys? We'll send you all the mind maps once this marathon ends and then you are sorted. Okay? Chalo, guys. Take care. Eat well, sleep well, study well. Thank you so much for watching. I will see you tomorrow. And bye-bye. Welcome, Jayanand. Welcome, guys.